If somebody says whole life insurance is a scam, then they would almost have to say the same thing about real estate.
We say that you have control, you have restrictions and all. And if you're a critic, you can say, well, don't you have more control in a savings account? How did you come up with the certainty, control, efficiency, and liquidity?
What whole life insurance brings over to your side of the table when you understand it and when you're using it properly, you don't get to control the repayment schedule on a home equity line of credit. And the interest is not necessarily working in your favor.
When you say working in your favor, like it's a higher interest rate than insurance companies, or what do you mean by that?
There's multiple layers of protection in the form of death benefit, chronic illness rider, disability waiver of premium, and creditor protected against lawsuits in most states. Wealth is created through certainty, control, and efficiency, but that doesn't happen without liquidity.
What did you say that got Dave Ramsey to block you? Nate, welcome to the BetterWealth show.
Thank you, brother. Appreciate it.
We've known each other for multiple years. You're crushing it, especially on Twitter. You're like known in our industry and space for being like the infinite banking guy on Twitter. I think you've been blocked by Dave Ramsey. That might be one of your top credentials in the financial space. And we're going to be talking about all things your practice, frameworks, infinite banking, life insurance. You actually put out a 4-minute video that I think does a pretty interesting job explaining all things infinite banking. And since this channel is very familiar with whole life and all, I thought we could react to it. But before we jump in, why don't you give like a just an overview of like who you are, how do we know each other, and you know, just kind of your money mindset epiphanies before we jump into your video.
Yeah, so my name is Nathan Dean. My friends call me Nate. If you want to be friends, that's a good place to start. My wife and I have been married. This year will be 22 years. I don't look my age. You and I both have that in common. I've got 4 kids. My 2 boys are the oldest. They are 17 and 20 now. And then my 2 girls are 14 and 11. And we live here in Southeast Texas in the Beaumont, Texas area. And I've had the privilege for the last 6 years of running my company, Unlimited Life Concepts. We call it ULC for short. And we specialize in the infinite banking concept, just teaching people better ways to control their capital, create certainty, efficiency, liquidity, all those things. And the epiphany that I had was in 2017 when I read the book Becoming Your Own Banker by Nelson Nash. And up until that point, my financial acumen was built around Dave Ramsey, of all people. Save up, pay cash, buy term, invest the difference, all those things. And so I was just kind of following that model and just realized that even though I was doing everything the way I was told to do it, I was just not really satisfied with my results. I just felt like I should be further ahead than I was, and didn't really understand where that was coming from until I started to understand how money actually works.
What did you say that got Dave Ramsey to block you? Okay, I wanted to interrupt real quick and invite you to an in-person and asset mastermind that we are hosting for the financial professional. This is for the person that literally helps clients use these strategies. And if that's you and you want to meet me and so many amazing other people in person, we're going to be hosting an event June 27th and 28th. In Denver, Colorado. It's my 3rd time hosting this, and the whole purpose is to connect you with amazing people, connect you with amazing ideas, connect you with amazing strategies that can elevate your business. Garrett Gunnarson's going to be present, Tom Wall, we have Wealth Nation, Denzel Rodriguez, Chris Kirkpatrick, Ryan Lee, Todd Langford from Truth Concepts, David Anderson from Lifetime Income Process, and so many more people. It's going to be an incredible room, and if you, again, are in this profession, in this space, you won't want to miss. Go to andasset.com to check out more information, and hope to see you in June.
It was kind of funny because it wasn't even me commenting on one of his videos. It was someone had seen something that he said about infinite banking, and somebody had tagged me in one of the comments on Twitter, and I just made a comment to their comment, and it was just somewhere along the lines of, yeah, I used to do things like that, but then I learned some things that I believe are more efficient ways to get out of debt. And that was all I said. And apparently, either he probably didn't do it. It was probably one of his minions that he has working for him. But they went on my profile, saw that I was an infinite banking guy, said, "Nope, get out of here." So I
That's
found
so
out I was
interesting. I want to give
blocked.
the benefit of the doubt. I've never blocked someone. I probably have. I mean, maybe in your world you have to block people because they can harass you. But I find that funny. Of like, I just find it funny, this whole concept of blocking. Like, wouldn't you want to expose bad ideas? And wouldn't, like, I don't know. But
Yeah.
it's, or maybe thought or differing opinions could be problematic if you're trying to build movement.
Well, I know you've done a reaction video to Dave Ramsey's video that he put out a few years ago about infinite banking specifically. I mean, the title of the video is "Infinite Banking is a Scam" on YouTube. And it's funny because I believe that the message has become so loud
Yeah.
that he can no longer ignore it. So he finally had to put something out there in response to all the things that are being said. And you and I both know there's a lot of bad information that's in that video.
Yeah. Yeah. No, and I'm always on one hand really impressed with what he knows about life insurance. And I admire his dedication to staying in his lane. And I think he's helped a lot more people than he's hurt. But I also, with that, there are people that seem to get hit in crossfire. And I think I sometimes feel like we represent the most misunderstood asset out there, because even the people that are for it, some of our friends misrepresent it. And so they're like on the side of like loving life insurance. And then obviously you have people that hate it. And I think there's a lot of misunderstanding. And so before we jump into your video, what are things that you thought to be true when you first learned about infinite banking, even maybe taught, but now in 2024 and beyond, you're like, oh, I'm probably going to take a step back on that, or I maybe misunderstood that. Because I know for me, I have a lot of examples that I could go through if you want. But I'm just curious if you have any, or if you just are like doubling down on certain convictions.
Yeah, I think a couple different things. One was early on, I believe that policy loans were just something that you did for pretty much everything in your life. So my thinking's definitely evolved on that front, because I do believe that cash value inside of a life insurance policy is really represents the strongest dollars that you can possess in your life. And the reason why is because they're dollars you can leverage in an environment that you control. And there's nothing else on the planet you can do that with. So we need to treat those dollars like the value that they truly represent. The other thing is, it's not spoken of a lot in the infinite banking community. And I think it's one of the things that we've evolved in over the years, is just the true value of the death benefit, and understanding what that allows you to do. Because when your death benefit is equal or greater than your assets at the time, that gives you a lot of permission to enjoy your assets. And one of the things our mentor Trent Fortner has told us, and I don't know if he said this or he got it from somebody else, but when you are able to match a guaranteed event, which is death, with a guaranteed contract, which is life insurance, that creates a lot of freedom in how you want to operate in your life.
Good. It's good. I think I would love to double click on this concept of cash value being the strongest dollars. That's really powerful, because a lot of times we look at internal rate of return, and you look at the rate of return and you would compare it to any other rate of return vehicle. And you could make the assumption that, oh, like in a high yield savings account, I could potentially get a greater rate of return. But if you look at the dollars and the jobs that dollar is giving you versus the dollars and the job it's giving you in a whole life insurance policy, they're very different, including like the $1. And it would be cool to like visualize this sometime. Maybe we'll do that. I think let me know in the comments if you'd like to see like a video of me breaking down this in a visual format. But like, I even imagine like $1 in let's just say a high yield savings account gives you liquidity, gives you control, gives you safety. Probably could come up with a few other things. So that's that. And then you take other assets, and what do those dollars do? But then you put overfunded whole life insurance and, safety, control, tax advantages, and an amplified and leveraged death benefit, a guaranteed leveraged death benefit, privacy, and you start stacking that, and you go, okay, yes, like we have to understand that not all dollars are created equal. And I think that is something that's very, very hard to grasp. I don't know if you have a follow-up to that, but I think that's a powerful concept, and I think we could do a better job fleshing that out, because sometimes if you just look at an illustration and you're not illustrating that for people it's so easy to compare it to other assets, and
Yep.
it's a shame if we don't help people understand, like, hey, this is not necessarily an apples to apples comparison.
Well, I just happen to have this book laying on my desk, and I'm sure you're very familiar with it. Confessions of a
Yeah,
CPA by Brian Bloom. Capital equivalent value
good.
is something that is left out of conversations when it comes to trying to compare other assets to whole life insurance.
Yeah,
And there's a few different things. One is that aspect of capital equivalent value, but also what is the power of controlling capital in your life? And when we're talking about controlling, we go back to that aspect of having your say so on what the environment is, as far as how and when that money gets repaid back to your system. It needs to be repaid back to your system, because if those are the strongest dollars that we have, when would you want to reuse them again?
yeah,
As often as possible.
yeah. When you talk about policy loans, did you, when you first got into this, kind of had this mentality of like policy loans are like the secret, and it's like the more I use policy loans, like the better it gets. And now looking back, I don't want to put words in your mouth, but now looking back,
Yeah.
you're like, okay, maybe it's not the amount of time, maybe it's the act. I don't know. The epiphany that I had is like, our goal is to maximize savings and give our dollars more than one job.
Yep.
And period. Like the being your own bank, recapturing interest and all, doesn't actually logically make sense when it comes. Like, it sounds good. I understand you're recapturing opportunity costs. You're paying the insurance company, which you are an owner of, so you could say that. But for me, like being like a super analytical person, that really tripped me up, because I'm like, all right,
Yeah.
help me understand like taking a loan to buy groceries. Like, how does that help me? Oh, it doesn't. Like, and you kind of feel like betrayed a little bit. But I also understand, like, the argument is, well, you're helping people save more, but it becomes an ultimate Ponzi scheme if you're not making more money. That's the problem. It's like, I don't want to set up a system that only works if you're making more money. I want to set up a system that like is foundational. And so the thing that grinds my gears is when people take a very safe, amazing asset and make it risky by being too aggressive. I don't know if you have thoughts on that.
Yeah. So every now and then somebody will say, okay, so I just put all of my money into this policy, and then I can just take a policy loan and live off the money that month, and then keep repaying the policy loan and everything like that. I'm like, why would you do that? Because if you're just taking a policy loan out to repay it a few days later, that's such a fast movement of money. There's not really any value that's being created from that process. And you and I know, like, policy loans, there's prepaid interest that's subtracted out up front. But once you pay the policy loan off, it's prorated back to you.
Right.
A portion of that goes right back to you. So when you look at that overall, like, that's not really going to move the needle that much, if at all. So our philosophy is major purchases when it makes sense, and investments, because ultimately when you take a policy loan, you want to have a plan on how that money's going to return. And in my opinion, when you have an asset or an investment that you can put into that's going to create some sort of return back to you, well, the best place that can go is right back to the dollars that gave you that opportunity to begin with, so that you free those up and have them available to you again. So yeah, I'm not a huge fan of just randomly taking policy loans because you need to pay this or that or whatever. There's situations that we've come across where it made sense to get someone out of debt by structuring a
Okay.
policy where they could borrow against it very quickly and sort of refinance that debt away from the bank. But it wasn't them necessarily coming out of pocket with money that was sitting in the bank to begin with. It was usually some random account that they had that had just been sitting, like an old 401k or IRA or something like that. And we've never told anybody what to do when it comes to those accounts. This is not investment advice, but
Yeah.
when
Please
you
don't sue it.
teach,
Like, Nate has a family. He's got a family.
yeah,
He didn't want to get a lawsuit. All right.
when you teach people what's really going on and you teach people how they can gain certainty and control with their money, and the value of liquidity, having access to capital and things like that, they start to make those decisions on their own. And when they
Great.
look at a dormant retirement account that's just sitting there,
Yeah.
they ask themselves the question, what value is this creating for me right now? What
Yeah.
value could it create?
I would love, and I'm just, again, verbally processing this right now with you, is almost to create a calculator or a visual for people to almost do like person A versus person B, or like scenario A versus scenario B. And what you do is you go, okay, scenario A is I use my life insurance policy, fund, pay off debt, and maybe mathematically it takes a few more months, which means you are actually paying more interest, but you look out over a year, 5 years, 10 years, 15 years, and you see the benefit. And just like we said, the strongest cash, like there's other benefits that you get versus maybe liquidating this over here and then, so then you look at column, scenario A versus scenario B. And I like that because we can't say like, this is always better. It's almost like saying a higher net worth is always better. That might be triggering for some people, but you and I both know that a lot of people are, maybe look at their balance, but what they should be asking is, what is this going to generate in cash flow? And not all accounts are created equal. And that's just a fact. And so it's like, what are we actually what outcome are we trying to create? And then how much do we value different jobs? For example, this scenario B might have $10,000 more money over 10 years. Okay. So $10,000 more in cash versus scenario A, the life insurance route might have less cash, but you might get other benefits, a death benefit and other things. And so you have to ask yourself, do I value these other benefits more than, the cash? But that's what I think we all could do a better job on. But I think if we did that, people would actually realize like life insurance is incredible. And I really appreciate that you're giving me both scenarios. And I also think it exposes the people that really don't care, other than if all you care about is the liquid cash, you're probably not going to resonate with a lot of things that we do here at BetterWealth and working with you and a lot of our colleagues in the space. So I know I was like, Nate, we're going to jump right into this video, and we're already 16 minutes in, but I think it's important for us to build the foundation as we dive into your video.
Well, there's two things that come to mind. One is Bob Castellone, which is the creator of the LEAP process and program. He said, math is not money, money is not math.
Yep.
And so we have to understand that numbers, going back to capital equivalent value, numbers are not always equal when it comes to the value they create.
Yeah.
And the other thing, our friend Matt Love actually said this on your show, I don't care about the rate of return on a whole life insurance policy because I am the rate of return. It's something that Garrett talks about, one of our mentors, is I can buy my net worth and then I just get to play in that process.
Yeah.
Like I just get to enjoy and I get to go play. So, and it really goes back to his philosophy of win then play through his book, Money Unmasked, where like I'm creating the rules for myself and now I just get to go enjoy that process.
I love it, man. What we're going to do is we're going to watch your video. It's going to take a ton of self-control for you and me to keep our mouth shut. Okay. We're going to get real-time reaction, but then we'll go through it again and we'll comment. And my hope is that our audience will check your channel out, subscribe to your channel. You're doing lots of great things, and it'll be fun. It'll be fun to see the reactions from people. So we're going to be reacting in real time, but I would love to hear from you in the comments. What do you love? What do you do? Nate's got tough skin. He's on Twitter. I mean, any comment on YouTube. Trust me, we're playing in the minor leagues compared to Twitch.
Everything that's been said to me.
So let it fly,
been,
ladies and gentlemen. All right, here we go.
Infinite banking concept can be complicated, but I'm going to break it down and make it really easy to understand. I'm also going to give you free one-on-one access to me or my team at the end of this video. There are 4 main components to economic value that we focus on and promote through our strategies: certainty, control, efficiency, and liquidity. You'll see all 4 of these as we walk through this. You should be receiving some form of income. You can be working for someone else, running your own business, or you may even be retired. Yes, this can work for you too. When you receive your income, there are really only 2 things you can do with it. Money is either saved, which there are various ways to save, or it is spent in one form or another. But what if there was a place we could send our money to first to capture as many benefits and guarantees? We like to call this our family bank. Here are the benefits and guarantees. You have certainty in the form of guaranteed uninterrupted growth. You have control, which means you don't have to have someone else's permission in order to use it. You have efficiency in the form of leverage. Yes, you can borrow against it and make your money work in multiple places. You have liquidity. Unlike qualified retirement plans, you have access to this pool of capital that you are creating. You can also earn dividends. It's private, which means very little, if any, reporting to the IRS. It grows tax-free. There's multiple layers of protection in the form of death benefit, chronic illness rider, disability waiver of premium, and creditor protected against lawsuits in most states. It's non-correlated, not tied to the market, which means zero volatility or no losses. No restrictions. Your money can be used on major purchases, investments, or really anything that you can think of. Remember, it's infinite. Now, as we flow our money through our family bank, capturing the benefits and guarantees, we can also simultaneously decide how we want to save or consume our money. Okay, you may be wondering how. I've said this since day one. If you have a basic understanding of real estate, this will be very easy to grasp. Let's say you buy a property in a guaranteed growth market. As you make payments on that property, a portion of the payment is applied to the principal balance, allowing you to build equity in that property. And once you have some equity built up, often the bank will allow you to open up a HELOC, home equity line of credit, so you can access the equity for whatever you like. It's kind of like this, but so much better for all the reasons that I listed earlier. But very simply, unlike real estate, you have complete control of the environment. Okay, you've made it this far, so let me tell you what asset we are using. It's called dividend paying whole life insurance, but not like what you've heard about from talking heads out there. We specially designed this policy to accomplish your short-term and long-term goals. Just like with real estate, as you make premium payments into your policy, a portion of that goes towards the equity, or what we refer to as cash value. The beauty of this, unlike real estate, is your money can only go up. Think savings account on steroids. Now, these mutually owned life insurance companies that we work with have been around for over 150 years. And they have a pool of reserve funds which allow us access and uninterrupted growth of our dollars. Because you can take collateralized non-credit scored loans against your cash value or equity in your policy. And the only question they ask is how much and where to send the check. Now you get all the benefits and the access to your money. And that is how you gain certainty, control, efficiency, and liquidity of your wealth. If you want to learn more, I highly recommend getting a copy of this book, Becoming Your Own Banker by R. Nelson Nash. You can buy it off our website, bethebank.me, or Amazon. And if you have more questions and want to connect with me or my team, there'll be a link below.
All right. So like anything, making you sit through and watch that could be it can be cringeworthy hearing your voice. You're like, what is your thoughts on that? And is there anything that you would have changed now, like looking back, or feedback, or overall, what's your initial thoughts on?
First off, I love hearing my voice, so that's all good.
I actually do
No.
too, just not at 1x speed. I prefer,
Yeah.
and people are like, well, you already have a high pitched voice, Caleb. Don't you sound like a chipmunk at 2x? No, thanks to our speed up method, I sound just the same. But so I can't stand myself at 1x, but 2x I can tolerate it.
One of the things that I say in there is that it grows tax free, which really requires a little bit of understanding. If you
Yeah.
treat it the right way, it can be a tax-free strategy, but you do have
Yeah.
to treat it the right way.
Yeah. It's
So
good.
there is some nuance there in understanding the difference between tax-free and tax-deferred.
Yep.
Um,
Why don't you want to break that down? Because I think that's good that we break this down.
yeah. So as long as there's two different ways that you can access capital in your policy. The way we recommend is through policy loans, because those are non-credit scored loans. And also you get to control, if you decide, how you want to repay those, you get to control all of that. And there's no tax implications on something like that from taking a private loan. Whereas if you took a withdrawal from the policy itself, if you exceed the cost basis on that policy, then that's when you can get into tax implications.
Yep. I appreciate you mentioning that. I think it's I did a reaction to a video that I'm not sure is out yet, and I broke that down of like, listen, I agree. Like usually what I say is when set up and used properly, it's tax free but this person said if you set up your policy properly, it's tax free, and it's like actually no. Like you could have a perfectly designed policy, and there's a world where you'd have to pay taxes even if you cash out the policy. Like there's worlds there, but when you use it properly, a loan is not considered income, and as a result, it's an amazing thing, and you can use it outside of life insurance. Like that tax ruling is not just for life insurance; it's for a lot of different assets. Life insurance is just unique because you have this permanent death benefit that allows you to potentially take out loans throughout your life, not necessarily have to repay them, knowing that you have a permanent death benefit that most likely will be growing and will be there to make good on the quote unquote loans on your death. And so that's a way for people to, borrow and then die and have it kind of wipe clean. So
Yeah, there's a lot of information in that video. So if somebody was just exposed to that for the first time, I would say they probably feel like they're drinking from a fire hose right now.
Yeah.
All of those concepts that are spoken of can be broken down in very simple terms with conversations. And, if somebody's willing to learn and press into those things that are maybe foreign to them right now, those things can be broken down.
Yeah, I agree. The only other thing that I would say is when you said no restrictions, I get what you're saying here. It's a private contract. I think the critics could say, well, Nate, there is some restrictions, like the fact that you have to work with an insurance company, the fact that you got to get medical underwriting, the fact that you don't have all your money from day one. Like, it's funny how you and I are like, no, it's not necessarily a restriction. Like, I got cooked the other day when I talked about annuities and like different fees and surrender charges. Like, they're actually different things. Like, they are different things. But I said it and I was like, there's no fees in annuity. And then I said surrender charges. And I'm telling you, I got destroyed. And rightfully so, because I was like, all right, I get it. You're definitely, that sounds really bad for me to say that. And I think the same thing goes with restrictions. We say that you have control, you have restrictions and all. And if you're a critic, you can say, well, don't you have more control in a savings account? And if we're talking about first year liquidity, I would agree with you. So I don't know your thoughts on that.
Well, the concept in no restrictions, there's a little bit of an explainer that comes right after that.
Yeah.
Which is no restrictions. You can use your policy loans for anything you can think of, essentially. So that's kind of what that's referring to. But what you're saying, I totally agree with. Yes, there are parameters, there are rules that we have to work and abide by, essentially, in order to create this environment that we're looking for.
How did you come up with the certainty, control, efficiency, and liquidity being like the the four, because again, I find like, man, like a lot of these are it's like the same thing 4 times. Curious how like you came up with this, and then you went into other things like tax benefits and all. But I'm, thoughts on why these are the 4.
So certainty and control is something that we have spoken of from the very beginning. Nelson Nash talks about it in Becoming Your Own Banker. And, one of going back to that concept or that idea of money's not math, math is not money. One of the benefits of the concept of infinite banking is having that peace of mind and that control in your life.
Yeah.
One of Nelson's principles is don't do business with banks.
Yeah.
Some people may disagree with that completely, but for him and his situation, he was totally at peace with that. And there's a lot of people that feel that way, especially people who come from the school of Austrian economics.
Yeah.
Where they fully understand what the banking system is and how they don't necessarily want to be a part of that. So there is unseen value in leveraging policy loans to finance things in your life, even if the math doesn't necessarily work out.
Agreed.
Just because of that certainty and control. So certainty and control are 2 things that have been teaching for 6 years now. And as I started thinking through those things, it just became very obvious that, yeah, those are important, but there are other aspects of there's really like 4 pillars, so to speak, that really is what makes all of this come together. So on our podcast, our new outro phrase on our podcast is wealth is created through certainty, control, and efficiency, but that doesn't happen without liquidity. So learn how to leverage capital and you can become a cash flow legend.
I like it.
So there, it wasn't like, it was just one of those things that as I started taking a step back and thinking about all the things that we're a part of and just what whole life insurance brings over to your side of the table when you understand it and when you're using it properly, those 4 aspects just became very apparent. And really, when you think about your financial life, when you are subject to someone else's terms, there's not a lot of certainty that comes with that. Obviously, there's not a lot of control that comes with that. When you don't have access to capital, when you don't have liquidity, well, then you can't create the efficiency that you need to create. You can't get your dollar to do more than one job when somebody else is holding on to it.
So you believe that you need to have liquidity to create wealth?
I do.
Okay, let's put a pin on that because I'm actually...
Well, there's 2 things I'll say about that.
Yep.
One is James Nethery, who's a big name in the IBC community. Yep. He says 2 of the greatest frustrations you'll ever have in your life is when you have an emergency that you don't have money for or an opportunity that you don't have money for.
Understood. Yeah.
So positioning yourself where you have access to capital, I think, is really important.
Yeah, let's put a pin in that because I don't want to derail. I actually going to call a audible and I'm going to share my screen and we're going to draw through. This is going to go down as one of the best episodes yet today.
Love it.
And also, if you're not subscribed to the YouTube channel, we believe it or not, like 60% of people that watch our videos don't subscribe. The algorithm shows our videos to you today, but they might not in the future. Subscribe and like, and it helps. So appreciate all of you in advance that help us out by doing that. And you don't want to miss out on great content like this stuff. All right, so we're gonna put a pin in that. Let's talk about the concept of tax-free. We already addressed that. Appreciate your understanding. When set up and used properly, many great tax advantages, and it works very much like a Roth. Money goes in after tax. And you grow tax deferred. You can utilize your policy loan, which today in the tax code is income tax free, and then your money will get passed on income tax free. Again, if you have an estate problem, which I think a lot of people will, there's other ways to avoid that you need certain trusts and all, and that we're not going to get into in this video. All right. So then we talk about, death benefit, chronic illness rider, disability waiver of premium, creditor protection against lawsuits in most states. I believe every state has some type of creditor protection. Some of it's just laughable. It's like, okay,
Yeah.
15 grand. Thank you, California.
I was going to say, it's
Appreciate
got to be
you like
California.
yeah. PSA, move out of California. Like, just do it. You'll thank us later. All right. So, anyways, this is what's interesting in this lineup, because talk about something that's hard to put a value on. You can't put an IRR value on any of this. Potentially a death benefit if you look at an estate value, but this is something that, again, chronic illness rider especially, I want you to explain in your own words what that is. And when I look at like what the future looks like, I think everyone, this just gives you more options. And I believe the person that has more options is wealthier or better off than the person with less. I would rather have more options than not. That's a definition of being a free person, is options versus no options.
Yeah, I mean, the chronic illness rider is really, what it states. If you have a chronic illness or something like that, the insurance company will allow you advancements on your death benefit. So that gives you the ability to take care of medical costs, unforeseen medical costs and things like that. So that becomes really valuable for someone, because when you think about what could potentially happen to us as individuals, so many of us are operating off of a probability of what could happen.
Right.
But statistics don't matter when it's you.
I agree. Yeah.
And so, and this is something Trent said to me one time, and it changed my world. He said, "Nate, what is the probability of you becoming disabled?" And I said, "Man, I have a low-key job. Like, it's extremely low." And he said, "It's 50-50. And I was like, "What?" He said, "It's either going to happen to you or it's not. And you're either going to be protected for it or you're not." And like I said, probabilities and statistics only matter when it's not you. When it's you, man, I would much rather have the protection.
Yeah, I can speak to that. Just, becoming a father recently, the estate plan and all those things were something that, I knew was important, probably should have things in place. But, when everything's very simple, the business, there's a lot of complexities in the business. But the moment our baby girl was born, it just became such a different, mentality, and it had nothing to do with money. Like, that's all kind of figured out. It's like, who's gonna care for our daughter? And like that just became like really, really heavy. And it's like, yeah, odds are, I mean, knock on wood, like that's not ever gonna happen. Ever gonna happen while she's like a baby. But like, if it did, like that became the thing that I thought about. And it's like, and that amplified in other areas is again, like it could be a statistic. Statistics say it's not going to happen to me, but that would be really dumb to live off of that way and not be responsible and set things up that could change the trajectory of people's lives.
Well, and this may come up at some point again, but when we think about our financial life, as we're growing our money through rates of return and things like that, that is us playing offense.
Yep.
Well, the defensive side is the protection piece. And when we play really great defense, it gives our offense better opportunities.
It's good. I think people should re-listen to that, because I think a lot of times the thing that we want to talk about is offense. I've said this many, many times on the show. The ROI of 0 is high for me, meaning like having liquidity, having a lot of liquidity allows me to show up powerfully and take bigger swings in business, in relationships, in areas that I could argue that would be life-changing. Not just like a 8%, 12% annualized, not life-changing. Like it could, maybe over time, great. Like I'm talking life-changing, and I'm only able to do this kind of stuff because I play really good defense. And those of you that are in sports, like you could have the best offense in the world, but if you can't stop anybody, it's really, really hard to be consistent. If you have really, really good defense, Like your offense doesn't have to hit home runs every single time to win. So
back in
yeah,
2016, Patrick Mahomes was the quarterback for Texas Tech, and they were playing OU. And Patrick Mahomes threw for a college football record 734 yards and 5 touchdowns in that game. And when you hear that just by itself, you would think, man, they blew the doors off of OU in that game. But on the other side was Baker Mayfield, and he ended up throwing for 7 touchdowns in that game. 500 and something yards passing, less passing yards, but more touchdowns. And I don't know what the final score of the game was, but if you score 71 points and life scores 71, you still lost.
Yeah. It's good. It's good. Hey, it's good. And that right there could be, the worth of admission to this free YouTube show. So thank you for that. Just touch on home equity line of credit and how it correlates to IBC. I think it's pretty self-explanatory, but I think it's a good analogy for people that understand real estate.
Well, one of the most consistent assets available out there is going to be real estate. And in certain asset classes, you have equity that you build up inside of that asset, and a bank will recognize that equity, and they will essentially give you a line of credit against that equity. Mm-hmm. So you're able to access some of the equity, and equity is just the portion of the asset that you own and control at that point.
Yeah.
Based on how the bank recognizes it. So having access to some of that equity, now you can keep your asset and still use some of the value of the asset simultaneously.
Yep.
So now you're leveraging capital, potentially. Now you are giving your dollar more than one job.
Yep.
But you don't control the environment. And there's a couple things to that. One is you don't control the value of real estate, whether it continues to go up or down, but it is one of the more stable asset classes out there that people use for accessing equity. So the other aspect of that is you don't get to control the repayment schedule on a home equity line of credit, and the interest is not necessarily working in your favor, so to speak. So with a whole life insurance policy,
when you say working in your favor, like it's a higher interest rate than insurance companies, or what do you mean by that?
Well, the interest payments that are being paid back to the bank, you don't necessarily get to participate in the profitability of the bank the way you do in a whole life insurance company.
Yeah, I understood.
And that really takes understanding the whole life insurance aspect of it in the policy loan, which you do. But with a whole life insurance policy, when you take a policy loan, when you build up equity inside of that, and you take a policy loan against that, there's prepaid interest on a policy loan. There's a cost of capital in everything that we do.
Yeah.
So we don't borrow money for free. Everybody would go out of business if we did that. So there's prepaid interest on that we have to repay. But as we are repaying that policy loan, remember, we've got certainty and control on our side. We've got efficiency because we have the ability to do more than one thing with it. We have access to that capital through liquidity, all those things. So as we're making loan repayments, the interest is being paid back to the insurance company, but that keeps the insurance company profitable so that we get to participate in the long-term growth and the dividends.
Right. Yep. Just like when insurance companies invest over a long period of time and get better assets that you and I don't have access to because we're we're nobody compared to the balance sheets of these insurance companies. Like that's a good thing as well. What if you had a HELOC and you had a IBC policy, and your IBC policy was had higher loan rates in your HELOC? Would you choose the HELOC over your life insurance, or what's your framework of where you choose to go first?
It would depend on what I was using it for. But I would say for me personally, I like the idea of keeping as much certainty and control on my side as possible.
Yeah.
So if I had access to both, it would depend on what I would potentially be using the money for.
Okay. Can I challenge you on that?
Say it again.
Can I challenge you on the why does the what you're going to use it for matter? If it was HELOC, if it was something that was
a little bit more stable, something that I felt really good about, I might save my whole life insurance money for something that might be considered a little bit more risky. Because when I do have control of that environment, that gives me some rules to play by that I wouldn't get to play by with the bank.
Okay. Yeah. No, I this is maybe where, I mean, we're talking about technicalities at this point. The way that I see it is, if I had my life insurance policy and HELOC, it doesn't matter what, if I'm going to separate the decision from how I'm going to finance that decision. If I'm going to decide to buy a car, like I hear a lot of times people are like, well, I'm not going to take a loan to buy a car. You finance everything you purchase. So it's like, did you pay for a car? Did you drive a car that you shouldn't afford or whatnot? But it's like, if I decide I'm going to buy this thing, it could be a crypto, not investment advice. It could be a car. It could be real estate. It could be a vacation. I decide over here. Then the next question is, I look at my asset sheet and look at my control bucket, and I look at different areas of where I could finance that. And for me, if I had access to a bank HELOC and a life insurance HELOC or a life insurance, I would go to the HELOC most likely first. And here's why, is it's, especially if it was cheaper money, but even if it wasn't cheaper money, I'd probably go to the HELOC because I just value control on my side. And then if everything hits the fan, now I have an asset that I control to at least pay the interest of the HELOC to figure things out. I think the problem becomes if I'm leveraging both. Then if you're leveraging both, then I want to make sure that, if I'm leveraging both assets, then it's really, really important that the activity that I'm using my HELOC for, I need to know that I have less flexibility there than I do in my policy. I personally just live my life with buffer. And so having life insurance, like having that, I have the benefits of the flexibility and control, whether I use it or not. That's the key thing. Like I can use a 30-year mortgage, have a ton of liquidity over here, and know that maybe I don't have a paid off home, but I have 15 months or 15 years of mortgage payments, worst case scenario. Or, if this, so it's just I've never actually articulated this on the show, but I think it would be interesting to hear their thoughts in the comments. Who do you resonate with? And Nate and I are pretty much saying the same thing. It's just an interesting mental way of thinking.
Well, and it also depends on the numbers that we're talking about, because, you never want to recommend somebody being over leveraged.
I agree.
And if you, like you just said, if you were looking to put both of those things out there simultaneously, and you didn't have anything as sort of your buffer or safety net, your control, if you didn't maintain that aspect of it, then I wouldn't recommend something like that.
Yeah. Last point that we'll make is the short-term, long-term way that you structure policies. This obviously is really key, is like overfund. Is there any epiphanies that you've had around like overfunding? I've gained a lot more empathy for the life insurance haters out there, because I've seen a lot of people use my own book, and I'm like, I'm sorry that I created content out there that people are using to promote bad policies, and that's just the cost of freedom of speech. What are your thoughts around policies and like any epiphanies? I know that we talk about the process is greater than the policy, which I agree, but I think the policy and how it's designed matters, and it could be a big difference depending on how it's designed.
Yeah. For someone who is not necessarily in need of a lot of liquidity early on, and they are valuing the death benefit and the long-term growth of the policy and what that looks like, it might be designed a little bit different than someone who is needing access to a lot of capital up front. And I think we both, from time to time, utilize the single premium options when they're available, and it makes sense for that person. That could be a really nice feature for someone. And it doesn't necessarily violate or get you in trouble or even close to the MEC rules, because there are riders and everything that are forced on the policy to make sure that doesn't happen. And a single premium option is that. It's a single premium option. It's something you do one time when the policy first goes active, and then you just kind of settle into the normal premium going forward.
Yeah. Yeah, and we both use term riders, PUAs, early liquidity, and so I think flexibility is also key. I think a lot of the talking points, they steal your cash value. Not really true when you actually look at like increasing death benefits, and it's super not flexible. Well, not true if it's properly structured, and it's like super high commissions. Okay, not true if it's structured and you have no cash value in the first year. Okay, not true. So it's like, yes, and like that's where it's like, hey, can we like be on the same? You want a hug? Like I'm with you, man. Like I really am, and it's just like it's a bummer when everything's painted in the same. It's almost like saying like real estate's a scam. There's a lot of people scamming people for real estate. There's also a lot of wealth that has been created because of real estate. It's maybe less about the asset and it's more about the investor. Before I share my screen, because now you'll get to be able to analyze my way of teaching under a microscope.
Well, since you mentioned real estate, one thing that I've said before, if somebody says whole life insurance is a scam, then they would almost have to say the same thing about real estate. Obviously, they're not the same assets.
Right.
They function differently and everything like that. But just in the ability to recognize that there is an asset that has value, that you have the ability to build equity in, everything like that, might have some tax favorable treatment, things like that. Yeah. Like you can't brush one off completely and just be in love with the other. And if you do that, it's because you just don't fully understand it yet.
Yep. I love it, man. I love it. All right. Are you ready to use me as a punching bag now?
Sure.
Let's go back to definition of wealth, because you said liquidity creates wealth. I want to just address that. How do you define wealth?
For me, wealth is not a number. Essentially, everybody has different definitions of wealth. Personally, I like the idea of kind of attributing that to financial freedom.
Yeah.
And with that number being, if I've got money coming in from my assets that are offsetting my expenses, then by definition, I am financially free. And I can continue to work in the job that I'm a part of now.
Yeah.
It might enable me to go work in a business or something like that. But wealth is going to be different for everybody. Everybody's going to define it differently. There's a drastic difference between being rich and being wealthy. That's for sure.
Yeah, that's right.
Because rich can be having a high income, but not necessarily being able to keep any of it.
Yeah. Maybe it's my study of Stoicism recently. I'm really fascinated by like just looking back in history. One of my favorite Bible verses is knowing that we're all gonna fade away, but the word of the Lord's gonna last forever. And it's just like I know that all of this this world is fading, and it's so interesting to me that people hold on so tightly to things that are ultimately gonna fade away, like their ego.
Yeah.
And my definition of wealth is living intentionally. Just like and again, I understand Robert Kiyosaki's concept. I understand that this is hopefully our definition of wealth grows, but it's one of the things that I like. That's why I have a reminder behind me, one life. Like you have one life. I believe you can live wealthy or choose to live wealthy even if you have a ton of debt. Even if you have there's elements of, can you be 100% intentional if you are enslaved to the system? No. But I also like that. That's so my definition of wealth doesn't necessarily require liquidity across the board, because it's like I the standard is the metric, which is this is my intentional life. This is for me. This is what a free man looks like. Is I want to live intentionally. So then in my equation, yes, of course, that means a ton of liquidity, because I just said like I'm a huge fan of liquidity because it allows me to show up powerfully, allows me to run businesses and not have to panic every other minute. Am I going to make payroll? And also for me, that's the key. What I've found is I like to separate or divorce the intentional living life and what that looks like. And we understand it's a process, not to financial, but I'll show you in a second how we tie it back in, because I find that it gets people to start thinking. I know people that are choosing to make less cash flow and are choosing to live more intentionally, and they'll have to be the ones that decide pros and cons. I'm not going to be the one that judge. I also know that people are crushing it in the financial world, and they're divorced and their kids don't talk to them. Maybe that they don't care about that. For me, that goes into the equation. So again, it's just, these are the type of discussions that are valuable, because what is wealth? And I find that a lot of people are chasing things, and then they're going to get to the end of their life and been like, why? And I'm like, that's another thing that I'm like trying to have more conversations around, is like, okay, we talk about goals and things that you should do, and we're even incorporating like intentional living KPIs, which I think is going to be super fun. Like, what do you need to be doing to know that you're like dominating? But I also think like reverse engineer that. What are the regret list? What are the regret KPIs that know like, I will regret this? Because I actually think those work better. Like, I will like, how many days of me not staying for dinner? Like those are the kind of things that are also interesting to me, because we're so like, all of our goals are like on positive things, but what if we just reverse engineered it and like, I am terrified of being 85 and regretting. So what are the things that I would regret looking back at 85 and saying, okay, what are the, if I reverse engineered those regrets, what were the inputs to that? And now I'm way more self-aware to avoid years of drought. Thoughts on that before I get into my lovely drawing? And if you have a hard stop, please let me know.
No, it's a few different things. One is reminds me so much of what Garrett talks about in living in your soul purpose.
Yep.
And that intentional living, those things just go hand in hand, which I love. From the perspective of regrets, we were actually recording our podcast this morning, and I quoted Jim Rohn. One of the things he said in one of his talks was, if I would have known what some of the things were going to cost me that I went after, I never would have gone after them. And it's really important for us to take a step back and sort of count the cost on decisions that we make. I'm actually going through a book right now called The Road Less Stupid with Keith Cunningham. I don't know if you've heard of that one.
I've not really heard of that. It's a required reading. I hear.
But it's got, his key in challenging you to spend some time thinking through your decisions and really like what's going on in your life is like, when you're faced with an opportunity or a decision, what is the upside is question number one. What is the downside? Question number two. Can I live with the downside? Question number three. And at the beginning of the book, where he says, think about the 3 worst financial decisions that you made. If you could unwind those, how much more money would you have? Made me sick at my stomach.
Good.
And so now it's forced me to really take a step back and go, man, if I could just vet some of these decisions and opportunities through those questions and spend time thinking through those, it's going to save me a lot of heartache in the end.
Yeah. That's really good. I use that decision-making framework all the time. What's the upside? What's the downside? Can I live with the downside? And it's been really refreshing. Also, this concept of thinking, and sometimes, being high drivers, like, it's like, oh, like, what's the return on thinking? Like, we got to be doing something. It's like, oh, I've done, and those of you that know me know that this can be tough at sometimes, but I've done like clear everything, just a notepad, and just think. And another thing that I love about Keith is he talks about adding constraints to things. Sometimes we're like, okay, if I had no money, what would I do? And I think that's really good, is like, no matter where we are, try to like take things that you think you take for granted out, and it makes you start thinking more creative. And, adding constraints is another concept I learned from Keith that has been super key. All right, let's go into this. So here's my framework. So this would be like my version of 4-minute-ish video. Is number one, starting with you the human, and we talk about what is wealth. We talk about living why, which is a form of understanding your values, being self-aware of yourself. What are the strengths that you have? What are the weaknesses, opportunities, and threats? What are the responsibilities that you have? And really being key with that. And then also just getting really clear on what does intentional living look like. And from there, we're creating like intentional living metrics, we're creating vision, and we're also creating identity. And so there's a lot of different lessons within that. But I like, for me, the most important thing first and foremost is, do you value yourself as your greatest asset? And like, are you actually showing up on the balance sheet? I know a lot of our friends like talk about this. The fact that on a balance sheet, your ability to create is not on there is really interesting to me. And I feel like the system, Wall Street, whatever we want to talk about, the system is not designed to enhance the human being. And so you could make the argument that by funding that system, are you in the wrong? So people are like, I didn't sign up for a philosophy class. Like, I'm just asking questions. Like, could you fund a system that ultimately is keeping people down? You know, I have friends that are like, they're convinced that like we're just sheep and we're getting sheared for the sake of the ultra wealthy. I'm not necessarily going to go that far. I just like, are the systems designed to enhance the human being? I would argue to say no. So anyways, you have a human, and obviously there's strengths that they have and all in that. But like, this is ultimately an input because you have your ability to create, your relationships. There's so many things that this human has, but at the end of the day, like the fact that we can create things is like the most beautiful thing. I would say one of the most beautiful things is that we were created. And I won't even get into that, but like when you look at, because there's a reason the Bible started with the creation story. There's a reason why most faiths started with the creation story. Is like there's meaning and purpose to that. So the fact that we can create is interesting. And so one of the things is like, okay, we create an input, obviously go down this whole supply and demand. Like ultimately we're paid for our output, which is either a service or product. And then the market tells us that service or product is valuable. And so obviously if we want a greater output, we have to look within. Or we need to look at like what are other levers that we can use, thank you Naval, to increase our output. But at the end of the day, we create cash. And you know, currency, we could go down the whole list of like, what is currency? Currency is not money. It's not a store of value. It's only valuable because other people say it's valuable, but it's the thing that we can exchange for other services or products. And that's amazing. Okay. So you have cash, and at the end of the day, one of the other things that I would challenge of this whole idea of liquidity creates wealth is like, again, yes, but I believe like the greatest asset is yourself. And I'm working on a book project. This is why this is all fresh for me. And I looked at, okay, if you had $10,000 and you increased, you know, if you got 8% rate of return over a year, $800 increase, which is amazing. If you put $10,000 into you as a human being and potentially increased your hourly rate at $5 an hour, and you worked over 2,000 hours, that's 100% rate of return on your money. And you're now setting the floor. Your skill sets, you as a human being, are more valuable, whereas an 8% rate of return could go backwards. So it's one of those like where we invest, our ability to create is amazing. But this is cash flow is there's no meaning, there's no purpose, there's no like cash flow is stale. It's just money that ultimately is getting less and less valuable. This is what I loved about your videos. You have two things, saving and consuming. That's what I use, is consuming and controlled. So consuming is money that is ultimately your life. This is the cost of your life. This is taxes, housing, cars, transportation, giving. This is your kids. This is the cost of living your life. Well, like some people could push back on that, but at the end of the day, consumption is your life financed, and hopefully it's an intentional that there's a lot of benefit of just tracking where your money's going and asking the question, am I intentionally spending money to finance my intentional life? And then money that's not controlled is saved. What I love about saving is it's a verb, that you're not becoming wealthy. I mean, Robert Kiyosaki says savers are losers. Saving is a verb. And going back to your idea of liquidity, like if you don't save anything, you have nothing. Yeah. 100% of zero is still zero. You could be the best investor in the world, and if you don't have anything to multiply, if you don't have any cash flow to multiply, what in the world are we talking about? So saving, I use the word control because it's that same concept of like, I'm going to take control of this money, but just because I control doesn't mean anything. Not all control is created equal, but control, and then this is something I can't take credit for, but the framework of like, okay, now I have control. There's really two buckets of money. I think E stands for emergency, O stands for opportunity. And this is where it's like, okay, money's got to reside somewhere. And you could easily do this in a high yield savings account, put money in a high yield savings account in an emergency. And then the opportunity stands for like, what am I going to invest in? Am I going to invest in making myself more valuable? Am I going to invest in hiring people on our team? And am I going to invest in real estate? Am I going to invest in crypto? Am I going to invest in fill in the blank? And, hopefully the investment, and I use question marks over here because it could literally be endless, but hopefully these go back to here. So now it's like I have active cash flow that I create, and now we have, whether it's called leverage. I'm not a huge fan of passive. It's just like it's demeaning, but we almost have to use it. Leverage cash flow, or we're doubling down on active cash flow. It's just now our cash flow every year is hopefully getting bigger. And over here, we can figure out what is the return on control. What is the cash flow return on control? And then there's also like not all assets are created equal. I could get a 9% over here, maybe a 5% over here, but the 9% super risky, and I'm not, don't have expertise in all. And so it's not just like, a higher rate of return is better than a lower. We have to look into that. That's why I'm such a big fan of investing in you, because usually the risks are less and the upside's like not even on the same planet. And this is where life insurance, or you want to say something?
Oh yeah. And you may be going there, but you were talking about, you could put this in a high yield savings account and everything like that. But 9 times out of 10 in a relationship, one of the spouses is going to be ahead of the other when it comes to money and decisions and things like that. And I'm not saying who's who, but in a high yield savings account, if something happens to the person who's in charge, so to speak, the other spouse, the other person, is left with that money and not really the knowledge and information and all those things that could come from them still being around. But when we're looking at whole life insurance, something happens to that individual. Now there's a windfall, which is a replacement of that. If it's done correctly, is a replacement of that person's income at the least. So you have an insurance policy that's protecting your capital all along the way.
Yeah. Love it. And I'll get there on just like the thought process. So it's like, so then the last part that I would talk about is the umbrella. And the umbrella just stands for risk management. Like, obviously we want to ensure that if a health accident happened, if the house burns down, if we have to go to the emergency room, if an individual dies, gets disabled, that this whole thing that we're building doesn't just collapse. So we call this risk management. And at the end of the day, we can run different scenarios, scenario A, B, C, D, and we can look at, pros and cons. Where life insurance, infinite banking, whole life insurance comes in is you're spot on. It's this action right here. And it's saying, okay, my money's already got to flow somewhere. In a high yield savings account, it's like, okay, it gives me earlier liquidity, check, and it gives me benefits. But everything that we talked about earlier, and rewatch your video, it's like, okay, but by me funding a life insurance, now I give $1. Now my dollar goes into risk management because it ensures my ability to create. That if we get sued, there's certain benefits to that. There's certain tax benefits to that. There's chronic illness benefits to that, which is another risk management. There's like, just go down the list. And that's when you're like, okay, over the next 10, 15, 20, 30, 40, 50 years, this could be an equivalent of millions and millions of dollars. Maybe not in cash value difference, but it could be. But in dollar benefits, giving your dollar multiple job benefits. And that's, for me, that's where it's like, you and I both agree on this, like infinite banking and life insurance doesn't necessarily make you, the producer, more valuable. It could even get in the way of creating, I don't try to overhype things, but at the end of the day, when it comes to your money's got to reside somewhere, which Nelson Nash gets all the credit for that, your money's got to reside somewhere. It's always flowing. And instead of me funding the systems, doing my thing, and that's great. Like, if that was better for my family, I would do it. I'm not one of these people that are trying to take down the system to take down the system. I want to do the right thing for my family, but I also want to, I also don't want to fund a system that's going to hurt my children's children's children. So there's aspects of that, it's not all black and white, but at the end of the day, it's life insurance in this concept is like, even from the beginning, I'm getting more like it's making this scenario better. And so that's, it's fun to look at different ways of, I know that your video was literally just talking about the concept. It was less about the process. I would love to have you come back on and make a video about the process, the framework of how, because I think that's really powerful when we can take framework and process and let's poke holes at it and then add life insurance. So now here I am. Question, beat me up. Let's have a conversation around this. Around this mental framework.
I love it. I think it makes a ton of sense, and it gave me some ideas for some things that maybe I could do a little bit different with my clients as I'm walking them through, because what most people don't understand about whole life insurance is that it is just a perpetuation of your income onto the people that you love and care about.
Good.
And I heard that not long ago said that way, and I really liked it. I don't even remember who said it, but I never heard it said that way before. But most people don't know what that number is. So there's a concept in the underwriting world called human life value. Essentially, good. What do you qualify for? And I equate this to, let's say, you have a fairly new house, Caleb. Yep. So let's say your insurance agent calls you today, your homeowner's insurance agent calls you today. Hey, Caleb, got great news. I can save you 50% on your homeowner's premiums today. If that's all the information you have, that sounds great. Now, the only thing you have to tell me is which half of the house you want insured. Who's going to sign up for that?
Good.
But that's what we do with our human life value all the time when we're not properly insured.
Unfortunately, Nate, half of America would probably sign up for that.
Yeah.
Unfortunately, as dumb as that sounds, there are people that would do it because they can't see beyond the future. But obviously, that would be dumb, because if something happens, you're literally underwater with the bank.
Yeah. But that is, that's just analogous to what is sort of taking place right now when people aren't properly protected.
I love that example. Love that example. And I also, it's so interesting to me when people you're like you said, they'll insure everything else, whether they have to, or they just I want to make sure, but they don't value their ability to create. And they're like, it's like a battle. And it's very interesting. It's very interesting. And I think we're trying to have conversations that hopefully will elevate the conversation. And whether you are someone who helps clients set this stuff up, I hope this conversation's been helpful. Please check out what Nate's doing. Please follow him on Twitter and some other places. Nate, I want you to be able to share where people can find you, but also really get clear about why you're doing what you're doing. And I would ask, if you're helping people get results, are you getting results in your own life? And if there's one thing that I think hits home is across the board, hypocrites are just not someone that are high on people's pedestals. And I find that a lot of people in our industry, in our profession, are hypocrites. They're financial coaches that are a mess behind the scenes.
Yeah.
In almost every area of their life.
Yeah.
Nate's like, this episode is really big trouble. Yeah. I thought we were coming on to react to a video, not.
Yeah, we run into that from time to time, where you meet somebody and you get to know them. You see them in one light, and then you get to know them, and you're just like, I'm just not as big of a fan of this person as I once was. Now, what I will say is there's a massive difference between admiring someone and then them being very transparent and open with you about their failures and their successes along the way, than somebody who's just hiding behind this curtain hoping nobody pulls it back.
I agree, and I think it comes down to intent. And I mean, I started with no money, and I'm grateful. So it's less about a balance sheet and net worth, and it's more about the intent. And the intent was always pure, and I think people saw that. And I think there's a lot that we could unpack there. Is there anything that you want to do as we close? I know that our whole relationship has been fun as we look back on how we met and how we've grown together. But I'll just hand the microphone over to you, and I would love nothing more for the dedicated listeners and watchers of the show to be able to check out what you're doing and support what you guys are doing, because we're all a part of this movement of really helping people wake up and live free.
Absolutely. And one of the beautiful things about this space is there's really no competition. There's so much value in collaboration. And the outside world would look at both of us and go, oh, they have competing businesses. No, we don't. Like, we have a collective mission just to help people. And like you said, just help them live more intentional with what they want to do. If they want to spend more time with their families, then let's help you accomplish that. If you do want to be an entrepreneur, well, how can we come alongside you and help you with that? So at the end of the day, we're just doing the best job that we can to help people create the life that they want. Like you said, we only get one chance at this.
Yeah.
And unfortunately, a lot of people live like they've got other chances and they only get one. And so they choose to live in misery. And man, it's so much more fun when you live in abundance. Yeah. So that scarcity mentality, really, in my opinion, is from the enemy. Because God even says in his word that, hey, I didn't give you a spirit of fear. I gave you a spirit of power. And so anytime that we find ourselves in fear, we have to understand that we're paying more attention to the enemy than we are the victor. But as far as like where people can find me, you mentioned Twitter. So my Twitter handle is @ChroniclesNate. I'm Nate, the Infinite Banking Coach, out there on Twitter. Obviously I have a YouTube channel with the same handle and name. Which is where the video is posted, where you can find us there. Website's bethebank.me, again, as repeating what was already in the video. But just a couple minutes, I just want to share for anybody who doesn't know. Whenever I was, first off, like, my heart's just been very full today, knowing that we were going to do this. Because I remember when we first met was actually at the Nelson Nash Think Tank event. We were at this mixer the night before, and you didn't have a beard at that time.
I couldn't grill one.
This was 2020, so flashback a few years, and I see you sitting at this table, and my first thought was somebody brought their kid. Like, that was just my first thought. But I can say that to you because you and I have both experienced the same things when it comes to not looking our age. And sometimes that's been really frustrating in life. But once you get out of high school and past college age, it starts to become a fun conversation.
Huge plus.
So I don't look my age either. I'm about to be 43. And so we just sat down, and just immediately the conversation, I just felt very connected to you from the beginning, and we stayed in touch over the years. And I heard this said recently that you don't understand how powerful your story is until you tell it to someone else. And for me, when you called me up in 2022 and you said, I've got this event I would love for you and Brandon to come speak at, in my opinion, just thinking about my story, I'm just like, it just seems kind of normal and everything like that. But you never know who's going to be inspired and empowered by your story. And so the relationships that I have made through our connection, our relationship, I mean, I have new mentors in my life because of our relationship together. Garrett being one of those. And not only that, I have new friendships that have been formed because of our relationship together. And, every new connection that we make is an expansion of knowledge. And my knowledge since we connected has been drastically expanded. And so I love you, brother, and I appreciate you so much for what you do.
The feeling is mutual, and this is what I love, because there's not a lot of males that are willing to talk about the things that we're talking about recorded. That's going to go on YouTube, and hopefully, regardless of what profession you're in, you can share your story. I think what you shared about your story is powerful, and it's been fun, man. And like vice versa, it's a two-way street, and it's been a joy, and it's been fun to see you guys grow, and even having opportunities about conversations that we've had offline about areas that we can both grow the pie together. And I think that's the definition of abundance. It's not like you're a better person. The most selfish people, if they think long term, should be abundant. Just think about that for a second. It's like it's actually a better way to live your life. More joy, more money, more friends. Like, why wouldn't you want to be abundant? It really comes down to thinking short term, and I'm attracted to other people that have those values, and you and Brandon have those in spades. And so excited for what the future holds, man. It's gonna be a fun ride.
Absolutely, man. Looking forward to it.